We have Marc Chaikin here. He does have 40 years on Wall Street as a trader, stockbroker, analyst, head of options for a major brokerage firm, but most of us know him for his indicators. And so we are pleased to invite you and see what you have to present for us, Marc.
Thank you, Erin, and I'm very pleased to be kicking off Relative Strength Week with StockCharts on Market Watchers Live. This presentation is about how to find winning stocks using industry group relative strength. It's an approach that I've used for more than 50 years. So my background began with a very fine, fundamentally oriented Wall Street firm, but almost immediately I started using relative strength. And the reason is I had been introduced to someone named George Chestnut, who ran a mutual fund that had outperformed the Dow for over 30 years. And he did the original research on group relative strength. So I studied what he did. Then I tested thesis from a guy named Bob Levy, which was about stock relative strength. That was the core of my technical analysis that I combined with the firm's fundamental research, created Chaikin Money Flow to get a better feel for what institutions were doing. And then the culmination of my life's work, the Chaikin Power Gauge rating, which enables all of us to bring fundamentals into the equation, because it's so important, no matter how good your technical analysis is, to understand the underlying fundamentals, just like the drug stock that Tom was talking about. Big up move, good that it's supported by a fundamental story about a tie with Gilead. So I thought I'd start off Relative Strength Week with a very brief history of relative strength. It's not new, it goes back all the way to the 30s. This timeline is courtesy of Linda Raschke. Where I came in was with George Chestnut's work in the 60s, studied what he did, looked for the best performing stocks in the best industry groups. I've been doing it ever since. We're talking about 50 years. And then a guy named Bob Levy published a PhD thesis where he back-tested relative strength, found 6 months was the ideal look-back window. And that's what people like William O'Neill really key in on. It's what we've keyed in on. And now at Chaikin Analytics, we have a new relative strength heat map, very similar to Scooter. So if you're using Scooter or not on StockCharts, I encourage you to do that. And then finally, I added to Linda's timeline, Cliff Asness, arguably the best quantitative manager, had over 250 billion to start 2018. Relative strength, relative momentum, one of his key predictive factors. Thought I'd start out with a little bit of the market to put everything in context. It's been a wild ride, as we know, in 18, 19. Lots of ups, lots of downs, but here we are, having just made a new all-time high on the S&P 500. As Tom pointed out, large caps are where the action's been, particularly in the NASDAQ now that tech is back up, and small caps have been underperforming. But let's look at a one-year chart of the SPY, the most actively traded instruments in the US market. We love to read the chart from the bottom up because at the bottom of the chart is our power gauge rating, combines fundamentals and technicals when we're talking about ETFs. Predictive, new, it's bullish on the SPY. We look at Chaikin Money Flow to see if the institutions are buying the ETF, and they were buying it big time in January, February, March, and they've come back in again. Institutions use the SPY as a way to get instant equity exposure if they're bullish on the market, but they don't have their stocks teed up the way they'd like. So what we've seen here is institutions are coming back in near the 2950, 3000 level. But what happened in May? We got a pullback of 6.5%. And if you were watching CNBC, you would have thought the world was coming to an end. So let's put pullbacks into perspective because this is so critical. This is just normal market behavior. Since 1945, we're talking about almost 75 years, there have now been 79 declines of between 5 and 10%. We call that a pullback. The average decline is 6%. So what happened in May is typical. Typically last 4 weeks, that's exactly what happened. We peaked on May 1st. We bottomed out just before the beginning of June. And the good news is the recovery to new highs is typically 1 month. So pullbacks are your friend. Ignore the headlines. look for buying opportunities. Where do you want to find them? In the strongest stocks, in the strong industry groups. Now, this is one of my favorite charts from StockCharts. It's a weekly chart of the S&P 500 index with the 52-week new highs, new lows at the bottom. And we're reading a lot now about spike in new highs in early June and now a bearish divergence. But as you can see from the chart, this has happened many times in the past, and that bearish divergence doesn't necessarily mean that we're going to sell off sharply. We're also seeing put-call ratio, sentiment indicators showing the public coming into the market. So there's a lot of talk about technical deterioration, but what we're keying in on is a pattern that's been so reliable. And it looks at what stocks and bonds have done through the end of June. And we find that going back to 1980, there have been 9 prior instances where both stocks and bonds were up 5% or more in the first half of the year. That has really bullish implications for the balance of the year 2019. 8 out of 9 times, the S&P 500 was up after that dual stock bond performance, and the average gain was 11.3%. You add that up to the 2950 level and you get a big upside target here. 8 out of 9 times. This is the 10th time that's happened. We're bullish for the balance of the year. How we get to those higher numbers, maybe 3,100, 3,200 on the S&P, is never an easy road, especially once earnings season is over, but we've got a lot of potential influences. What I'd like to do is concentrate on the trend of corporate earnings. Interest rates, obviously very critical. That's why Tom leads with them almost every day. Sector and group strength and weakness. That to me is the key for finding the best stocks that are going to outperform the market and knowing what to avoid. So stock selection is very critical. And if the problem is what to buy and when to sell, our solution is Chaikin Analytics for both iPad and desktop. We've got a really wonderful following from the StockCharts community. My chief market strategist, Dan Russo, does a video, 15-minute video every morning that you can see. And we think that there's plenty of potential, but it's about knowing what to buy. And for me, as I said, for over 50 years, I've recognized that fundamentals drive the market. That's what the big institutions like Fidelity and T. Rowe Price look at, but that emotions drive the market to extremes. And we've certainly seen emotions play out in the market, not just that little 6.5% drop in May, but the fourth quarter where people basically panicked into Christmas Eve, and then that big rally up where a lot of people were on the sidelines because they were fearful of the market. So for me, the path to profits for over 50 years has been to combine fundamentals and technicals. Problem is, how do you know what the fundamental outlook is for a stock? You can't really rely on the brokerage firms. They're right some of the time, but not all the time. They rarely put out sell recommendations. So I created the Chaikin Power Gauge rating in 2010 to synthesize everything I had learned from our institutional clients when we had an institutional brokerage firm that we sold to Reuters. I wanted something simple but powerful that reflected the various styles and time horizons of the market participants. And we'll look at that in a minute. So the Chaikin Power Gauge rating is a simple display with a lot of number crunching going on under the surface. And now we have ratings for all active equity ETFs in the US, combining fundamentals and technicals. And we're going to show you how to use that approach to find strong stocks. So what the Chaikin Power Gauge does is it makes the complex simple. It takes all that fundamental data on the right side of the screen, distills it down to the gauge on Starbucks, which goes back to late December, early January, when Starbucks had a very bullish rating in the Chaikin Power Gauge. Interesting thing here is the financial metrics, which are the value metrics that a Warren Buffett would use and constitute 35% of the model, were actually bearish at the time, but yet the overall rating was very bullish because everything else was bullish, including the analysts and the insiders. So it's an eclectic model. it looks at 4 different aspects of the market: value, growth, technicals, and sentiment. Within each of those 4 components, there are 5 factors. Technicals are only 15% of the model, but notice that within technicals and sentiment, you've got 2 relative strength indicators. In the technical component, you've got relative strength to the market, and in the sentiment or expert component, you've got industry group relative strength. Industry group relative strength is one of the most underappreciated and most powerful tools you can use. And the good news is that you can measure that in StockCharts with Scooter. Really powerful way to see if an industry is outperforming or underperforming. So the proof for me is always in the performance. This is the performance of the power gauge rating going all the way back to 1999. 11 years of that is back tested out of sample, but everything from January 11 forward, which mirrors this chart, is real time. Average very bullish stock up 18% on an annualized basis. Average very bearish stock flat even after a 10-year bull market. If you combine that power gauge rating with relative strength and Chaikin money flow, you've got all you need to know which stocks you want to be looking to buy, and then you just need a trigger methodology. So what we've done is encapsulate that into a discipline methodology that's reflected in this pyramid. Successful trading demands a discipline methodology. At the top of the pyramid, the power gauge rating to tell you the fundamental potential of a stock and industry group strength. Very important. It's the basis of this webinar. Bottom of the pyramid, Chaikin money flow, which many of you are familiar with through StockCharts, and Chaikin relative strength, which is a heat map of relative strength that you'll see in a minute. The sweet spot are the buy and sell signals. We have 6 pairs of signals. They're either filtered by relative strength or the power gauge rating. But now we actually do the analysis for you because a lot of people don't have the time to loop through charts. So we've developed what we call our pre-trade checklist. Notice that 2 of the factors are relative performance, relative strength to the market and industry strength. Stocks in a strong industry group like semiconductors or software, you've got the wind at your back. And we're going to show you the checklist for a couple of stocks as we go through the Chaikin process. So let's start out with classic Chaikin bulls. Power gauge rating is bullish and relative performance to the market is strong. So relative performance is and always will be, for me, the decider, if you will. We want to look at Chaikin money flow to see if the institutions are on board. But let's take a look at a classic Chaikin bull. This is Fair Isaac. Probably don't know that name, but you do know the symbol FICO because this is our credit score. So let's look at this chart from the bottom up. Power gauge rating is bullish. That means the fundamentals are right and the stock is likely to outperform the market. It is outperforming the market and has been since January. So we like to say the market agrees with the model. No matter how good your fundamental research is, if the market doesn't agree with you, guess who wins? The market always wins. Then we look at Chaikin money flow and we see that the institutions have been buying Fair Isaac big time actually since December. So in December on 24th, Christmas Eve, when the market made a big new low on the S&P at 2350, FICO barely broke the previous low, went back into an uptrend, had a couple of positive earnings reports, and you see a buy signal that triggered just recently. If you look at the checklist, it reads the chart for you. Everything is positive except for our overbought oversold indicator, which is dropping back down out of overbought territory. We'd love to buy the stock on a pullback, but that recent signal in a stock in a strong industry group, computer software and services, was one of our signals oversold buy. That's a new 8-day low on a stock that has a bullish power gauge rating. So there it is. There's the whole picture. That's how you combine fundamentals and technicals, and relative strength plays such a key role in that because when a stock's outperforming the market, institutions are looking to buy it on dips. We've got a screener to find these stocks, And Tom talked about how NASDAQ was outperforming today. Well, back in March for a webinar that I did, NASDAQ was outperforming. And so I took the NASDAQ 100 and I applied all of those factors that we saw in the pyramid. Wanted a bullish power gauge rating, wanted the stock to be in a strong industry group, and we wanted money flow, Chaikin money flow, and relative strength to the market to be strong. Narrowed the NASDAQ 100 down to just 9 names, and we're actually going to look at 4 of them today because these 4 names have been the market leaders for the last 4 months. Cadence Designs, which Tom wrote about in his email this morning, Comcast, and so forth. These were the leading stocks, and we found them with this very simple screening process. You can do that too. Classic Chaikin Bear, these are the stocks you want to avoid. Power gauge is bearish. That tells us the fundamentals are unfavorable. Underperforming the market, there it is again, relative strength, weak. And Chaikin money flow is red, not green. And lo and behold, Tom, great minds think alike. Halliburton has been our poster child for classic Chaikin Bear for over 9 months. Now, why is that? Power gauge has been bearish, so the fundamentals are not good. Relative strength to the market has been weak for 15 months. This stock has just been under pressure. Institutions selling it, even on the rallies. So if the institutions are selling it, smart money's getting out, you need to get out as well. And you see an example here of our relative strength sell signals. I'll just explain that because you can do this in StockCharts. If a stock is underperforming the market, so in StockCharts speak, that means Scooter is down at the bottom of the page, and it rallies above its 21-day exponential. When it drops back below the 21-day exponential, it triggers a relative strength sell signal. The reason I like this signal is because it's accurate about 70% of the time, as long as Mr. Market doesn't get in the way. And it persists for about 4 to 8 weeks. So you can put on options trades, you can be short the stock, you can do a lot of creative things if you have confidence that it's not just a trading move that's going to stop when it gets to the lower volatility band. And you see 3 examples of relative strength sell signals in Halliburton. But bringing in this whole group concept, this is the XOP, and that's why ETFs are so fabulous, because we used to monitor industry groups, but there were no tradables, and people would trade the Fidelity sector and industry group mutual funds. Now you've got liquid industry group and sector ETFs. So this is the XOP, and notice that the power gauge rating has been bearish for 6 months. So if you combine a weak stock in a weak industry group, you're talking about stocks that you need to avoid and look for put buying opportunities. We love vertical put spreads. By the way, nothing in this presentation is meant to be a recommendation. We're not licensed with any federal or state agency. This is just for informational purposes. So what we've been talking about, fundamental and technical analysis, is something that we actually put a label on. We call it the dynamic duo, the Chaikin power gauge rating to monitor the fundamental potential, and Chaikin relative strength, that red-green heat map, to tell you what the market thinks. And this combination finds big winners and losers. Just be aware that relative strength can stand alone as a bullish or bearish indicator, but basically those are your momentum stocks, what I call the hope and dream stocks, where they can rally dramatically without fundamental underpinnings, but you're on a high wire without a safety net. So please use stops and admit defeat if it starts to turn around, because the fall can be dramatic, as we'll see in a minute. So 2 examples of the dynamic duo on the upside. Here's Starbucks. Looking at the chart from the bottom up, power gauge rating was bullish back there in January. Stock had been outperforming the market since October. How do we know that? Our relative strength heat map, this is like a stochastic of relative strength. Think of it as a 6-month stochastic of relative strength line. When it's red, the stock is underperforming the market. When it's green, it's starting to outperform the market. And you can monitor that in Scooter, as we'll see in a minute. But then we get these relative strength buy signals. Again, stock is outperforming the market. dips under its 21-day average and rises above it. So this is your entry point, and you can expect 4 to 8 weeks to the upside in this case. This is what it looks like in StockCharts. There's Scooter at the bottom, trailing up above 90. Right above that, we have Chaikin money flow. The only missing piece is the power gauge rating. We know that the market agreed with the model. That's why we think fundamentals are so important. This has been an incredible uptrend. Power gauge right now is neutral because valuations are very stretched. But Starbucks has gone from basically 63 when that first relative strength signal triggered to a big move above 90. It's an extraordinary move for Starbucks. Big turnaround in the company and so forth. Now let's look at the dynamic duo on the downside. This is an REIT, Macerich. They're getting hurt hard by all these retail store closings. This chart ends in April of 2019 when I did a webinar. Power gauge was bearish. It was underperforming the market. So there's the dynamic duo on the downside. You had gotten the relative strength sell signal back in September at a price of about 58. And smart money was selling. Even on the rallies, Chaikin money flow didn't go green. And notice that you had 2 sell signals. These are the relative strength sell signals back in April with the stock at around 41. So what do you think happened to the stock based on everything we've talked about? Think it went up or down? Raise your hand if you think it went down. And I hope there are a lot of hands raised out there, because here's what happened. With smart money selling, the stock dropped from 41 all the way to 33. Relative strength is still terrible. The power gauge has turned neutral, but with Chaikin money flow negative and the stock underperforming the market, it's a stock to avoid. And this is how you improve your trading, by focusing your long positions in strong stocks with bullish fundamentals.
Hey, Mark.
Yep.
For the record, I raised my hand.
Thank you. I suspect a lot of people did. And this is not rocket science. This is not hard if you follow the discipline. So there's where the sell signals were in April, by the way. It's never too late to sell a stock when everything is lined up against you. That's something that you really should take away from this. And bottom fishing is very costly. So the last pattern we want to talk about is what I think the key to making and keeping profits. It's spotting these personality changes where a stock goes from outperforming the market and everything is rosy to underperforming the market. And our relative strength indicator goes from red to green or green to red. So here's an example of a bullish personality change in a semiconductor stock. Cypress Semiconductor had a bearish rating going into January. And then you got a positive earnings surprise. That's why the work that Aaron and Tom do here is so important. It will alert you to these changes, positive changes that get reflected in analyst opinion changes and so forth. But the key is, with that spike up after the earnings report, the stock started outperforming the market, and then the power gauge rating turned bullish. So do we want to buy that spike? No, just as Tom said, sometimes the best opportunities come after earnings. So we look for what we call that first buy signal after the bullish personality change, when the stock starts to outperform the market. So Scooter will be up around 80 or 90 at that point. You get the oversold buy signal, and that's a nice entry point. And then you get another signal back there in May, but this signal comes with Chaikin money flow positive. This is a pattern we've taught to institutions for over 30 years. Chaikin money flow was first introduced in 1982. If a stock sells off for 5, 6, 8 days, gets oversold, and Chaikin money flow stays green, what does that tell you? It tells you that smart money is taking advantage of the decline. They're not contributing to it. So you get your buy signal with Chaikin money flow green, and then you get a takeover bid. You can call that luck, or you can call that being well prepared. If you're disciplined and you follow the same process day in and day out, good things happen. Now here's a bearish personality change in a very popular stock from 1718, NVIDIA. Stock went from outperforming to underperforming in October. The power gauge turned bearish at 260, within 20 points of the all-time high on October 5th. And the stock dropped all the way from 260 to about 122. Underperforming the market almost the whole way. Institutions selling, and they're selling yet again. Now the semiconductors are strong, so you'll see some sort of carryover strength in NVIDIA, but until they prove that they've turned their business around and that these various markets like Bitcoin mining and AI and cloud computing are still going to be robust growers for them, we don't know. And if we don't know, then I just say stand aside. So everything we've looked at, we call the ideal setup. Warren Buffett calls it the fat pitch. He's famously said they don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch. That to us are the 6 pairs of buy and sell signals because that's our entry trigger. So what we found is people are busy, and we created our daily email alerts back a year ago in May. And what that does is for the list of stocks you're following, it tells you before the opening at about 8:10 which stocks have triggered these signals. And I think that's part of trading profitably, knowing which stocks you're following have created an actionable event. So on June 4th, Synopsys, which is in the very strong software group that we're going to look at in a minute, triggered an oversold buy signal at 113.41. Here's what the stock looked like. Dynamic Duo, bullish power gauge, outperforming the market since January. Institutions buying it. I happen to make this my bullish stock of the week in my weekly market insights in February. Actually, my partner Dan Russo did because he filled in for me as he does every 3 weeks. $96 made Synopsys as bullish stock of the week. And then we got that buy alert at 113.41, and look what the stock did. It rallied in almost a straight line to 136. So if you're prepared and you know what you're looking for, and particularly know that this is a strong stock and a strong industry group, you're going to pull the trigger. And this was a beautiful trade that just evolved in a month and a half. There's your alert buy signal. So now let's get to the crux of what today's webinar is all about, using ETF industry group strength to pinpoint winners, because that's how you get the tailwinds in your long trades. So here's how we do it. We use sector and industry ETFs to find winning stocks. We look at the power gauge rating for the ETFs. We look at something called the power bar that we're going to show you on the next slide. We drill down on strong industries to find the strongest stocks in the industry ETFs with the best potential. So what is the power bar? It's a bull-bear ratio. It's the number of stocks with bullish power gauge ratings versus bearish power gauge ratings in an ETF. It's like looking under the hood, seeing how much gas is left in the tank. What's the potential for an ETF's holdings? So we start with a top-down approach. We look at the 11 select spider sector ETFs, and we see that energy and consumer discretionary are way down the list, along with real estate. And at the top of the list, materials, financials, and technology. Particularly interested in financials and technology. Financials have been leading, but not where you think, not in the major banks, but in the insurance stocks and in some of the money management and brokerage stocks. You saw Schwab earlier as an upgrade. So we start with that, but what we're really interested in is buying strong stocks in strong industry groups. So we look at the S&P sub-industry groups, they call them subsectors, and this shows you where the power gauge rating is bullish. Remember, this is a predictive rating. Predicts future performance. Year to date, semiconductors and software have been leading the pack, along with aerospace, home builders, insurance. They all still have bullish ratings. So this is where we want to find our buy candidates. And we want to avoid weak industry groups like retail and oil and gas. So let's look at the software ETF, XSW. It's been leading the rally in 2019. You had a bullish personality change. You can get them in ETFs as well as stocks in early January as you were breaking out of that little flag pattern. And Chaikin money flow was strong, and the software sector. The software group has really been leading. You can see the stocks with bullish ratings in the group. So plenty of names to choose from, including Cadence, which reports tonight after the close. And here's what Cadence looked like. I made this my bullish stock of the week back here in January. So how did I find Cadence? Well, I was looking for software stocks with bullish power gauge ratings that were outperforming the market, where money flow was strong. And you can see Chaikin money flow showed tremendous accumulation. And we got a really nice run in the stock, a couple of positive earnings surprises. There are those big spikes that Tom talked about after they report. Sometimes they consolidate and give you a buy signal. In January, because we were so oversold in December, it just kept going. No chance to get in if you weren't in prior to earnings. In April, you got the spike up and it consolidated, and then we got a relative strength buy signal in early June with the stock around 63.50, and that's your 4 to 8 week move up to 75. So that's what a classic Chaikin bull looks like. Strong stock in a strong industry group. Here's what it looked like in StockCharts. Scooter and Chaikin money flow, very bullish. You don't see the fundamentals. I think that's the missing piece that helps you put this all into play, so that when you get a buy signal, you understand what you're doing and why you're doing it. Now let's look at retail underperforming. You had a bearish personality change all the way back in September. Power gauge has been bearish, underperforming the market. And you had this little, what do we call this, a flag pattern? But you had relative strength sell signals in the middle of that, sort of suggesting that it would break to the downside, not to the upside. So we wanted to be avoiding retail. This goes back to March and April. And here are some of the bearish names in the retail sector, stocks like Macy's and Nordstrom. And here's what the charts look like. Here's Nordstrom making a new 52-week low. The reason you want to avoid these stocks is you want to avoid getting caught with that waterfall after a bearish earnings surprise. Now here's a less well-known name, Duluth Holdings. They have those very clever commercials with workmen and itchy underwear. And I love the commercials, but the stock is a dog. And it has been a dog since December. How do we know that? Our relative strength heat map is red. The power gauge was bearish. So that dynamic duo is bearish, and you want to get out of the way. We happen to have a relative strength sell signal right ahead of an earnings report in early April, helping you avoid that bearish earnings surprise. And in case you're thinking of bottom fishing in Duluth, just look at the pre-trade checklist. It's all red. Everything's weak. Power gauge is now neutral. Discourages you from bottom fishing, which is a really good thing. One final way to utilize relative strength, we have a power grid. Everything in the upper right is a stock with a bullish power gauge rating in an industry group that has a preponderance of bullish stocks. Lower left, stocks like Halliburton, bearish power gauge rating in industry groups that are weak. But there's a swap opportunity. Notice that on the upper left, these are bearish rated stocks in strong industry groups. So Netflix has a bearish rating. It has for about 3 or 4 months in Chaikin. But you've got Comcast, CBS, and Dish with bullish ratings, which encourages you to swap weakness into strength. So we've been suggesting on webinars for 3 months now that people should be selling Netflix and swapping into Comcast. This is how you upgrade your retirement plan. If you're trading, you don't want to be trading Netflix on the long side. You want to be trading Comcast. And that's how you use relative strength to improve your performance. So I'd like to show you something completely different. We created a product for people who wanted to get started with Chaikin. We call it Power Pulse. There are a lot of StockCharts users who subscribe because of my appearance on these webinars. And it brings almost all the Chaikin intellectual property into a mobile application. Here's a chart of Netflix over the last 6 months. The power gauge is a ribbon there. You see the rating. At the bottom of the chart, you see that the relative strength in the Chaikin heat map has just turned bearish in the last 3 weeks. So Chaikin money flow is weak, the power gauge is weak, then you get that disappointing earnings report, the stock gaps down, and that's when you're out of time, which my timer just told me. Really like to thank Tom, Aaron, and Zach for giving me this opportunity. Very proud to be kicking off earnings week that ends with such a great technician, David Keller, who used relative strength of fidelity for years, running the whole technical department there. So thanks, guys. Really appreciate the opportunity.
It was a great presentation, Mark. Really appreciate you coming on here and doing this. I think what you're pointing out here and simplifying to make people think before they get in, I think that is a wonderful concept and idea. I think your strategy is spot on, and really appreciate you coming on here.
Well, thanks very much, Tom. Thanks, Aaron. I look forward to the next time.
Absolutely.
Yes, for sure.